Good afternoon, ladies and gentlemen. My name is Ryan Suter. I'm one of the senior investment managers here at Sharewise, and we're here with Mark Waller, the managing director of One Click Life. Thank you very much for your time this afternoon, Mark.
Thanks, Ryan. And thanks everyone for dialing into the meeting and appreciate it for Sharewise as well. Thank you.
Thank you. So, how this one's going to run is we're going to have a brief presentation, just outlining One Click Life and how it's been tracking over the past year from Mark, and then we're going to open up to a Q&A. So, I've got a couple of questions for myself, and if any participants would like to submit questions through the Q&A function on Zoom, I will ask those once the webinar is completed. Thank you very much. Take it away, Mark.
Excellent. Thanks, Ryan. As Ryan mentioned, I'm Mark Waller, Managing Director of One Click Group. Thanks to everyone for dialing in today. Set up to help people manage their financial lives in a really simple format. Russell Baskerville's our chairman of the company. As I said, I'm the Managing Director. Russell and I both worked together from 2005 through to 2017 at Empire Limited, growing revenues during that time from $2 million revenue to, when I left, about $170 million revenue, and Russell went on to exceed 200 million and eventually sold the business a couple of years ago to Capgemini for over $250 million. A little bit about One Click Life, what One Click Life is. Look, what we're really trying to achieve, right, is providing our customers a really simple way to manage their financial lives. So we do that through a number of products, our tax product, lending product, and our wealth products, which are being built at the moment. And the reason we've started with tax and we like tax is it gives us a couple of really good points of difference, right? It gives us the ability to acquire customers en masse on an annual basis due to the need to do a tax return. Obviously, everyone in Australia needs to do a tax return each year. So the acquisition side of it is very important. It gives us quite a lot of data about our customers. So the financial data that we receive when someone completes their tax return obviously is quite detailed. And it develops a good trust relationship. Obviously, someone's logging into us, putting in a lot of personal details, lodging a tax return directly with the ATO through our platform, and builds a good level of trust. And that growing user base and acquiring those users on an annual basis provides a lot of optionality then as to other products that we can provide, having that relationship of trust and having that data about the customers. So the first product after tax that we brought to market last year was lending. So as lending products effectively are a really simple application form, which pulls a lot of data from behind the scenes and allows us to assess that customer very quickly and broker finance for them, whether that's a mortgage, personal finance, or car finance. Other products that we're building then is a wealth products. And we have an online wills product, which is already in use and generating revenue. We have private health insurance. We want to expand out our insurance products and develop a superannuation product. So we've been working on that superannuation product for quite a while. And we're pretty excited about what we're building there and the opportunity there to really help our customers clean up their retirement wealth, right? And when you look at who our average customer are, it's a 31-year-old. It's someone that may have been in hospitality, warehouse worker, or retail worker. So those really transient workforces where they might have multiple super funds and potentially a little bit of lost super and those type of things. So what we're trying to build there is a product that allows people to manage their retirement wealth. And the benefit to us then is we will charge a very small percentage on the funds under management and build up an annuity revenue stream from that. And that's really key to the lending products and the wealth products, right? Is building up that annuity revenue stream in the business. Tax is very cyclical, so we generate a lot of income from that June through to October period, and we really want to increase the income that we generate outside of those periods. So what does that look like in terms of the actual numbers and what we've achieved in our first year of being listed, which was 2023? So last year we were able to grow our user base by 55,000 users to over 120,000 users. So pretty significant user growth. Importantly, we were able to convert that user growth into revenue, which obviously we want to see that user growth revenue track user growth. So what we're able to achieve last year is spending $2.3 million on marketing, with a corresponding $2.3 million increase in revenue from 2022, where our revenue was $1.6 million, to 2023, where our revenue was just short of $3.9 million. So ideally, we want to continue to build our user base and obviously build our revenue at the same time. Moving on to where that revenue is coming from. So 2023, we introduced a few new products onto the platform. So we're able to introduce our next day refund product, our tax services, which has had a pretty significant increase to our average revenue per user generated in those services from the tax services. And we're also able to introduce our lending services in 2023, which includes a mortgage brokering service and our personal loan and car loan brokering service. So they contributed in 2023. And the key for us really, as we're growing out that user base, is really being able to expand our average revenue per user in both our lending and once we bring it on as well, our wealth services. So pretty important for us to continue to be able to grow that average revenue per user year on year. And we expect as this year follows through and we have more people using our next day refund tax service, we expect to see our tax revenue per user continue to increase into 2024. I mentioned that user growth there of 55,000 users in 2023. That was quite a significant growth on our significant acceleration of growth on our user growth in 2022. So we're able to grow 25,000 users in 2022 and then 55,000 in 2023, creating 114% growth rate out of our user acquisition. We expect to continue to increase that into 2024. I mentioned that we spent $2.3 million in marketing in 2023. We expect that to increase to the range of $3 to $3.5 million in 2024. What we'll always work to do is trying to achieve a 1-year payback out of that marketing or a year one payback out of our marketing spend. So our marketing spend in 2023 did contribute to an increase in revenue of $2.3 million. And what we're hoping to see this year is the increase in marketing spend of $3 to $3.5 million, generating the same in revenue growth in 2024. We're able to achieve that, interestingly, with reducing the average cost of acquisition of a new user, which reduced from a bit under $54 to only $42 in 2023. So if we can continue to manage that relationship of maintaining or reducing that cost of acquisition of new user whilst being able to apply more funds to marketing and grow our user base quicker than we have been previously, I think that creates a pretty good opportunity for the business. What that looked like in terms of our overall numbers, in terms of the financials, is we're able to achieve just under $4 million worth of revenue, creating our first margin after our fixed operating expenses, and an overall just under $2 million EBITDA loss in 2023. What we expect to see that look like in 2024 is operating expenses aren't going to change. Our fixed operating expenses are our fixed operating expenses. We expect to see them similar in 2024. And we expect that marketing spend of $3 to $3.5 million contribute to a growing revenue line of a similar amount. So all in all, we're hoping to achieve our first break-even year in 2024, which would be an excellent achievement for the business and puts us on a pretty exciting path as well. Importantly, we've only really just started to touch the edges of the available market to us. So we've achieved about a 1% penetration of the actual user base that we see as people that would use our service and get really good value out of it. 1% penetration has achieved a pretty reasonable return for us. We think that just with the tax product, we can get a pretty significant penetration deeper into that market in the order of, in that 10% range. Importantly, whilst that generates a significant revenue from a tax service, being able to add on the additional products around lending and wealth products, we expect to see quite a considerable improvement in that market opportunity for us from a revenue perspective. So in summary, what we're seeing is the opportunity to create a really fast-growing fintech business here. We've seen user numbers increase significantly from 2022 to 2023. We expect to see them increase even more significantly into 2024. We've been able to track revenue to user growth, and we expect to see that continue into 2024. We feel as though we've got a really good scalable business model, rapidly approaching break even, hopefully in 2024, and then profitable thereafter. We have strong growth in user numbers throughout the history of the business, and we expect that to continue. And as we launch new services into the market, we expect that revenue growth to just continue to track user growth and increase our average revenue per user. And that was the quick summary about who One Click Life is. We're very value-driven business. We have a significant emphasis on what we do, how we do it, and making sure we can do it as well as we want to. And Ryan, back over to you. I believe you had a couple of questions.
Yes, thank you very much, Mark. Really appreciate your presentation. So I've got a couple of questions prepared. If any of the participants would like to submit any, just do throw through the Q&A and I will ask away. So first of all, Mark, so all investors that purchased a pre-IPO are experiencing losses. What is the organization's strategic roadmap to exceed the previous all-time highs and demonstrate a sustainable improvement to current shareholders?
Yeah, excellent. Thanks, Ryan. Well, I think there's a couple of things that we need to do, right, and that we are currently achieving. The first thing is the growth in the business. We listed the business with a view of growing quite a significantly sized business. So continuing to work on that. Obviously, we've been able to demonstrate that between 2022 and 2023, and I think it'll be very important to demonstrate that again in 2024. And I think then really where the re-rating of the share price comes from is two things. One, improvement to our balance sheet, which will come through this tax period as we generate significant cash flows from the tax product. And then secondly, that inflection point of break even, which obviously is going to open us up to the ability to re-rate. And look, and from there, it's continuing to take the opportunities to continue to tell the story. And I'm out as much as I can, obviously telling the story, and we'll continue to.
All right, thank you. Thank you. Next question, how daily new subscriber numbers are comparing with the corresponding day last June? So essentially, with growth numbers comparing from 1 month to another, how they're looking comparatively compared to last year?
Look, at this stage, pretty similar levels. We don't really see much of a spike in our user growth numbers until really the latter parts of June into that July to October period. So at this stage, pretty similar. We do shift our marketing strategy during June from a pretty small number of platforms that we work across to expanding across all the digital platforms and significantly increase our spend in marketing during that latter part of June period. So expect us to see this year growing out from the platforms we've been working on previously, which is mainly around Google, Microsoft, Facebook, Instagram, to expanding a little bit more broadly into using TikTok, Reddit, and a number of other platforms. With this year, we're in a pretty fortunate position in that we're going to grow from 26 digital campaigns that we had running last year to over 50 this year. So I think we'll see some pretty significant growth coming out of that increase in the number of campaigns that we have running.
Thank you for that clarification. Now, moving on to average spend per subscriber, how has this been tracking again compared to last year? Is it trending upwards? Is it flat?
Yeah, so the really telling period is for us is really during this tax season coming. So it's at this stage it's been trending pretty flat. We expect that to accelerate from both a tax perspective and a lending perspective through tax period as the demand comes through. We're seeing a trend towards an increase in average revenue per user on the lending space, which is really good to see. And from a tax perspective, this will be the first year that we actually advertise our next day refund product. Last year, we took a pretty conservative approach to it, being the first year that we had that running. This year, we'll be running marketing campaigns around it and expect, as is an increased take up of that particular product, that we see an increase in our average revenue per user from
Thank
tax.
you.
Yeah.
All right. So last one from me, and then we'll move on to specific questions. Actually, no, two more from me. How are the cash reserves faring?
Cash reserves are fine. It's giving us an adequate amount to run the business and grow the business. We expect the cash reserves to run to their minimal level at the end of June, as they do every June, and then refresh through July, September. And we expect by the end of September to have pretty solid cash levels.
All right. So at current levels, is there any indication for the need to do a potential capital raise before the end of the calendar year?
No.
No. Okay.
No, we're in a pretty fortunate position that we're funded through our current growth.
Okay. Thank you. And last one from me now. You have briefly discussed throughout the presentation the addition of adding specific wealth products to the platform. Can you provide investors with a timeline on when the new products will be available to customers on the platform?
Yeah, we've been working on them for a while in terms of those wealth products, so particularly the superannuation product. We expect to have it ready for release in early next calendar year, so ready for the next tax season and start building that out. We're really excited about that. I mean, that part of the business and being able to grow the annuity revenues from the funds under management there, it really reshapes the business. So we'll continue to update the market on when we think we're going to have that ready. But yeah, at this stage, it's looking like early next year.
Thank you for that timeline. Now, just moving on to the participant question. Do you forecast higher marketing spending next financial year, or will it be stable with current expenditure?
Yeah, to the extent we can, we'll look to increase every year that we can, right? And that I think the key point for us is continuing to increase marketing spend where we can get a year one payback from that marketing spend. So we'll continue to increase. As I said, this year we expect to get to around the $3 to $3.5 million in marketing spend point. Next year, if we can add another million to that or another 2 million to that, we'll certainly be trying to.
All right. Thank you. Thank you. All right. Well, that about wraps everything up from us, ladies and gentlemen. So thank you very much for your time. And thank you very much, Mark, for the presentation. Really appreciate it.
Yeah, thanks, Ryan. Appreciate it. Thanks everyone for joining us.